as I've noted before, I've closed the SMT to new subscriptions for the rest of the year. I'll reopen probably early to mid-December for a month or two, and then do the same thing next year. I've been pretty clear on this. We're in the I think we're in the final years of the bull market in gold and silver, and I want people that join the SMT to be serious about metals. I want them to be focused on metals above everything else. They need to have patience, and they need to commit to a year. I'm not really interested in having amateur retail type traders that join, and if they don't get rich in the first year, or they over leverage on every trade and sabotage the bull market. Those are just not the kind of people I want in the SMT for the next 2, 3, or 4 years, however long this bull market lasts. So I'm not going to be doing a lot of, or I'm not going to have a lot of public metals analysis. It'll mostly just be saved for the subscribers that are enrolled in the SMT. But I will occasionally do a video, maybe 1 or 2 a month, and this will be your one. Maybe I'll do another one later in the month, but this will be your one for the month. So I mentioned in a tweet on X a week or 2 ago that this kind of stretch makes me nervous. Now, if you're the average retail trader that isn't really experienced, and tends to do the wrong thing at the wrong time, so the longer something goes up, the more bullish you get, as opposed to a professional trader, the longer a trend lasts, the more nervous they get, because it becomes more and more likely the trend's going to reverse. And so that's why professional traders, people that have a lot of experience in the market, they tend to be regression to the mean traders, whereas retail traders tend to be emotional traders, and they just the longer a trend lasts, the more bullish they become, or the more bearish they become, and then they get caught at a top or a bottom when the market turns and goes the other way. I don't think that metals are in the final parabolic bubble phase, and that would be the one scenario that would invalidate what I'm going to say today. I think it's probably still a little too early for that. I think that's probably at least 2 years away, because we're only a little over 2 years, about 2.5 years, I guess, into this 8-year cycle. This was the 8-year cycle low right here. So we're only 2.5 years into this, and that just seems too quick for me. And this base seems too large for me for this to be a final top. And if it's not a final top, then we're gonna need some intermediate corrections to cool off sentiment. Not intermediate top, I'm sorry. I mean a final bull market top. And it seems like it's too soon in this 8-year cycle for us to be just going vertical. Because if we did, then it would be over quickly. These parabolic phases where the public just really starts to pile in, they usually only last about 1 year to 1.5 years, and you can see we're closing in on 1.5 years from this breakout. So I think it's too early for metals to be forming a major parabolic bubble top. I think this base is way too large for this to be all of the rally that there's going to be. So I'm assuming that this is going to have a correction, and it is due. It is more than due. If this was our last intermediate cycle low, we're now 29 weeks into this intermediate rally. So it is more than due, overdue even, for an intermediate degree correction. And I'm seeing this because the last several intermediate corrections have been mostly sideways frustration type corrections that occur over time, and they build the fuel by causing frustration. This was one, this was one, this was one. So now everybody just assumes that this is going to be the same thing. It's just going to go sideways. I'm going to say probably not. I think this one might be more in line with one of the scary type corrections, something that looks like this, where we get more of a sharper sell-off that can occur quicker, but it just drops further and it scares people. So I'm gonna say we could go to 3,000, maybe a little undercut of 3,000. That would probably really scare people and make people believe that this was a final bull market top. And I think gold has formed. I think it formed an intermediate top here, and we're in the declining phase of this intermediate cycle. But I don't think it has a whole lot of weeks to run. Maybe 3 tops, maybe 4 more weeks. So I don't think you have long to wait, but I think we're going to have some scary down moves in here over the next 3, maybe 4 weeks, and we might get all the way back to 3,000 or a little below that. Now, and this is one of the things that you see at these intermediate tops. You'll see all kinds of analysis for why, from different permabulls, and this is how you sell subscriptions. When you get late into an intermediate cycle and price just keeps going up and up, and everybody that was bearish down here and couldn't buy is now turned bullish because it's gone up long enough to where they can just no longer remain bearish, and so now they've jumped over to the bullish camp, and they're 110% in on the bullish thesis at this point. And so you see analysts everywhere. They're all bullish, and they're all telling you how the trend is going to continue, or the trend is still it's in the early stages. And when you see that kind of sentiment, it usually means everybody's on the same side of the boat, and it's time for you to get on the other side. Now, understand, I'm not saying this is the top of the bull market, not even close. I think we're going to 10,000. All I'm saying is that we have probably pushed sentiment to an extreme level to where we need a profit-taking event to clear that sentiment and then prepare for the next leg up. And as I said, the last several intermediate corrections did that by just going sideways, by frustrating people. So the correction occurred more over time than it did by correcting in magnitude. So this triangle was one, and this correction here was one, and down here was another one. But I'm not in the camp that that's going to happen again. I think it's time for one of the scary type corrections. And so I think that started in gold. You can see here we've had multiple tries here, and gold has not been able to close a week over 3,400, and it has not been able to make a higher high for multiple weeks here. So I'm pretty convinced we're in the declining phase of this intermediate cycle for gold. I think it probably started in miners on Thursday. I think I posted this candle. Not a very bullish looking candle. This is an intermediate rally that's very mature. Despite everybody telling you that the rally's only started and it's going to continue forever. Again, like I said, this is how you sell subscriptions to late coming gold bugs that want to believe that even though they're buying 20 some plus weeks into a rally, they want to believe that it's still got 20 weeks to go, and that they're okay buying it at these elevated prices. And that's how you sell subscriptions to these people. But you're not doing people any favors. I mean, you're putting money in your pocket if you're the newsletter writer, but you're not going to make these people money. More likely, you're going to get them caught at a top. Unless, like I said, unless we're starting that parabolic bubble phase. But again, I think it's too early for that. So this is not a very bullish candle. Now, if this kind of candle had happened down here after a long decline, then I would say that is a very bullish candle. But that's not what's happening. This is happening 22 weeks into an intermediate rally, and that is a very mature rally. For gold, it bottomed a little different during that last triangle phase. Gold bottomed on on this week right here. So gold is on week 29, but both of those are very, very mature and overdue for a corrective move. And there's always corrective moves. You can see, I mean, we started the bull market here, but we had a corrective move here. We had a big corrective move here, and then we double bottomed here. We had a corrective move here. We had a big intermediate cycle decline corrective move here. Didn't stop the bull market. We still came back, made higher highs. So that's what I'm looking for, is a corrective move, something that clears this bullish sentiment and then gets everybody bearish again, so that the sentiment resets to how it was back down here, where all those retail traders were telling me that gold was dead and the price could never go back up. Now those exact same people are telling me that that there's always a narrative. The central banks are buying, and that's why price can't go down. Uranium is priced differently in the black market, and that's why it can't go down. This has nothing to do with fundamentals. It has to do with sentiment, and at some point you just kind of run out of buyers. Even central banks aren't perpetual buyers, and they like to buy at, when prices are on sale, just like everybody else. If price has gone up for 29 weeks, do you think central banks are going to keep buying? Probably not. They're going to wait for a correction, and then they'll buy at the bottom of the correction. So, ignore these narratives. It's always the same. There's always a narrative. When something has gone up for a long time, there's always a narrative by these, by the touts that this is the reason that price can't go back down. But again, fundamentals don't cause corrections. Sentiment does. When sentiment gets too bullish or too bearish, you just simply run out of buyers, or you run out of sellers, and then people that have been in the trade for a long time and have made a lot of money, they start to lock up profits. They start to sell, lock in those big gains, and then you start hitting stops. For people that chased late in the move, you start to hit their stops where the price comes down, and that's where they bought, and they don't want to go negative, and so they stop out, and then that just adds more selling, and it comes down. It hits the next person stops, and the next person stops, until you get to the point where there's just no sellers left, and the fundamentals are still intact. So at some point, then all the smart money that sold up here, the smart money, once the prices come back down like it did back down here, they say, well, that's low enough for me. I'm going to go ahead and start buying again, because I think the bull market is still intact, and bull markets make higher highs. So I'm assuming that somewhere down here, maybe I don't have the exact bottom, but I'm going to start buying and get prepared, because I think there's going to be another leg up, and there will be, because the bull market isn't over yet. So now this is the one that where I'm seeing the most extreme bullishness is in silver, and that's because we've got a breakout above 35. But I saw that same bullishness here at 33 when we got the breakout above 33. And the breakout didn't hold, and we came back down and had a normal intermediate degree correction, and then I'm gonna say that this candle here was more a product of the selling pressure from the stock market when it dropped into that what might potentially be a 4-year cycle low, and that just infected silver. So I kind of discount this as not true price discovery. It was just selling pressure coming off the stock market. So I'm going to say that the true intermediate cycle low was right here. And the rule is that these breakouts that occur late in an intermediate cycle don't generally produce sustained moves. So I see a lot of technical analysts saying, the move is just getting started in silver. I doubt that. And I see targets of, people are starting to talk about 50. Again, all you have to do to see how ridiculous that is pull up this long-term chart with the 200-week moving average, and you could see how far 50 would be stretched above the 200-week moving average. It's not going to happen. Not yet. Not until we get into those, final months of the bull market where silver, does this. Then we get that kind of stretch. It's too early for that right now. So when you hear talk like that, that should set off warning bells that that we're to the point where sentiment is too extreme, too bullish. People are it's just gone up enough weeks to where people now have irrational targets, and that's usually a sign that we're nearing a top. Now that doesn't mean silver has to top, or that silver did top on Friday. Silver can continue a little higher. Our next resistance zone is right in here at 37.50, and we might even get to that target at $40, but we aren't going to 50. And at $40 up here, you could see just how insanely far that would be stretched above this 200-week moving average. And this is a intermediate rally that is very mature. I think it's also like 23 weeks. And so I doubt this is going to produce a sustained move. It might produce a sustained move to 37.50, or maybe even long shot sustained move to 40. But then I think we have a intermediate degree decline that's going to come back down and drop back below 35. But I do tend to think that 33 is probably going to hold. This has been the level that the banking cartel has tried desperately for weeks and weeks and weeks to defend. And they did a pretty dang good job of it. They stopped the rally for 6 weeks on the upside here. Then when it finally broke out, then they got a gift from heaven when the stock market dropped into that major yearly cycle low, and the selling pressure allowed them to slam silver and get out of some of those shorts on this slam. But it didn't stay there very long, so they couldn't get a whole lot of them. And the fact that silver rocket launched out of that was a pretty big clue that the banking cartel was desperately covering shorts during that slam, and that was some of what caused this to rocket launch back up so violently. And they obviously could not get out of all of their shorts, so they're still stuck in their shorts. But the rally, and I've said this before, this is generally an ending move. When things start to kind of go vertical like this, it's generally an ending move. It's not the beginning of something. So I would take it with a big grain of salt when you hear all of these analysts saying the breakout at 35, that's, we're off to the races and we're going to $50. Yeah, probably not. Maybe 37.50. I would say 37.50 has somewhat good odds of reaching. 40, iffy. Might get there, but iffy. 50, there's just no way in hell silver's going to 50. Not yet. Maybe at the end of the year, but not right now. Too late in this intermediate cycle. So for the people that can, keep their emotions under control, try not to buy into the Kool-Aid that the gold bug analysts are selling you. Understand their motivation. They want to sell subscriptions while the iron is hot. And so, that's why they do this. When we're getting towards an intermediate top, it's easy to sell subscriptions because everybody's bullish. Everybody's looking for confirmation bias, especially if, they bought recently. They want somebody to tell them that the move is just starting and that they don't have to worry about a top and that it's going to $50. If you think, price is going to $50, then you're not worried about buying at 35. But if this is a mature breakout that probably does not have sustainable power, then you need to be cautious. So, if you're somebody that can keep emotions in check and look at this rationally, you understand that silver's not going to $50 on this rally. And it's iffy as to whether or not it could get to 40. 37.50, yeah, good decent chance of that, as long as we don't turn back down Monday. If we can keep the momentum going Monday, then I think there's a very good shot we could get to 37.50 before this rally tops. So, my one video, probably my only video of the month, will be this one. And it is a cautionary video to not let your emotions take over and cause you to get too bullish at probably an intermediate top.